Okay, it is October 3rd, 2016. It is Monday, and we're obviously trading the London session here, but we're fast approaching the New York session. And the New York stock market opens in approximately 2.5 hours from now. So what I want to do is I want to talk about the continuation breakout trade that's set up here on the pound dollar. This is the pound dollar, and this is the 1 hour time frame. And one of the reasons that I think that this is a perfect example is to show you exactly how I execute this technique, how I use the trade copier, what it will fulfill in your MT4 trading account. And I also spoke about this particular currency pair over the weekend. So on Friday, Saturday, I made a video. It went out over the weekend. The reason I say Friday or Saturday, it was after the market was already closed for trading, and we talked about this particular trading range right here. So I'm going to go ahead and open this, detach this, and show you and open up this consolidation range. So this was last week's trading range right here. This goes from September 23rd, the open there, all the way until the close on the 30th, and September. Now, this is obviously the first trading day of the month for October, and it didn't really surprise me to see that we were going to have the breakout this week. Now, I wasn't really anticipating that it was going to happen as quick as it did. I wasn't really sure. You never really know. But what I was talking about in the update video over the weekend, and the link to that video, if you want to watch it, is on this page just below this video. It is on this page. Please look for it. You'll see the link there, and it'll take you to the page that I posted over the weekend, so you can see what I was talking about. Some of the trades that we executed last week, the very last trade that we had just before the market closed, and then I was talking about this consolidation range. So when I see a lot of volatility and I see a lot of confusion or indecision, and the markets get really choppy, price action is really choppy, very often inside a consolidation I get fewer and fewer trading signals. And that's a good thing for the most part, because it keeps me away from chopping up and grinding away at my account. Because as you know, when you're trying to trade inside a consolidation, very often you see signals, but they don't necessarily go anywhere. They don't really produce the results you're expecting. Um, you know, Stop losses don't always hold inside of consolidation. It gets really difficult. And I can go on and on about why it's harder to trade inside of consolidation than it is on breakouts, but you've been there. You probably know exactly what I'm talking about. Now, it doesn't mean that I can't trade inside of consolidation. I have the HL30, which is basically a short-term reversal. I have the T2 pattern, which I showed in that video that you can see the link to. If you go back to the video that I sent out over the weekend, there was a T2 pattern, which is a major reversal, and it was a trade that I executed on the euro dollar. So these are opportunities, but again, I have to wait for those opportunities to develop. I'm not always in a trade at all times, every minute of the day, every trading session. I wait for very specific trading opportunities. And again, going back to the fact that I have to wait for these specific opportunities, it means that I do nothing the rest of the time. I'm just waiting, watching, following along with support and resistance, listening to economic data. I'm always aware of economic data and what's going to happen next. Now, where we left off on that video over the weekend was here on the pound dollar. This was the consolidation range that I mentioned. Again, this is the 1 hour time frame. I execute this continuation breakout trade, this technique, on the 1 hour time frame. The HL30s, for example, that's a different technique. That's the reversal. I execute that on the 30-minute chart. The T2 pattern, which is the one that I showed in the euro dollar that we had on Friday, the very last trade, that is something that I can execute on the 1 hour time frame. I look for entries on the 30-minute, but I combine the two time frames. But you learn how to do all of that. If you want to learn how to execute these trades and how I'm doing this, I include my trading course as a bonus with the Platinum Automated Signal Service membership. But if you don't want to learn how to, and it's too complicated, I totally understand that. Some of you are just, beyond the point where you want to learn another trading strategy. I get that. I wouldn't really want to, learn how to do another trading strategy if I wasn't interested in it and I had a full-time job. If that's your situation, then obviously you could just let me trade for you by using the Platinum Automated Signal Service. And these are the results that you're going to get. And this is what I'm doing. This is what I'm actually doing every day, every moment as I'm executing these trades in my own account. and you get the same results. So we talked about this consolidation range right here, this high and this low on the 1 hour time frame, which was from not last week, but from the week before that. That was the trading range. That was the high and the low. And I mentioned that I can't really expect anything too significant to happen, and I can't really expect a trending breakout move until this range is broken. Now, on the continuation breakout trade, that technique, again, I execute on the 1 hour time frame, and I'm going to show you exactly how the setup works here in just a moment. The indicators, exactly how I do it. I mentioned that the profit targets are a 55 pip profit target. Now, sometimes when we execute these on the yen crosses, we can earn a lot more than that. But right now, we're just going to talk about this because this is a perfect opportunity to talk about the breakout, because this was the last one that I talked about in the video, the update video, and then the first thing that happens on Monday morning, or Monday trading, we get an opportunity to trade this continuation breakout trade, so it's going to be fresh in everybody's mind, and you can see exactly how I'm doing it. So when the market opened for trading, there was a gap. Now, I know a lot of people try to fill gaps, and I've always tried to explain why I think that you have to be really, really careful trading gaps. I used to do the same thing. In the beginning of my trading career, as soon as I saw a gap, I would immediately try to trade to fill that gap, thinking that everybody else was right when they would talk about gaps are almost always filled. And for the most part, that is true. Now, if you remember back in February, there was a gap. I believe it was February. I think it was like 21st or something like that. If you go back to, and you were trading earlier this year, in February, there was a gap that was created on the pound dollar when the market opened for trading on a Monday, and it was because of Boris Johnson's comment leading into Brexit. Now, we had, there was many, many months until Brexit was actually determined, the outcome, but his comment created a gap that a lot of people were trying to fill all that first day of the gap, that Monday, and it never really filled. It took almost about 2 to 3 weeks for it to turn around and come back and go back up to where that gap had opened. I actually have some of the videos on the website, so you can see some of that. If you go back to February, you can see how we were trading it. A lot of people wanted to fill that gap and immediately tried to buy it, and I kept saying, be careful, be careful, be careful. You have to understand the reason why there's a gap. What caused that gap? If it was something that was based on a rumor, and it was then later on determined that that rumor was not confirmed and isn't really a valid reason to be shorting it, or for that gap to be there, then that would be a valid reason to try to fill that gap. It was just a temporary short-term reaction. But on a comment like that, for 2 or 3 weeks approximately, price just kept dropping lower and lower and lower, and people kept trying to fill that gap. You've got to be really careful with it. But we see that pretty much happening again here. So here, even though there was that gap filled, as soon as the gap opened here, there was a gap created. As soon as the market, opened, I watched hour by hour, had my alerts on my charts ready to go, so that when a 1 hour candle closes below that support level right there, which was actually the previous week's support, it tested again there on Monday, and then it's doing it again here on the open, and then eventually it finally turns around and comes back down and closes below that support level. That's exactly what we want to see. That is the continuation signal candle that you see right there. Now, I'm going to go over here in just a moment and show you the reason why this happened. I mentioned this in the update video over the weekend, that very often continuation breakout trades are created because of news, important economic news. For example, non-farm payrolls will create that, or other events, other significant economic data reports. So it's really important to be aware of the economic calendar and opportunities, or political events or statements. So let me show you what happened this morning. This was an article posted here. It was all over the internet, but this was on the BBC News. I'll have a link to it so that you can see it here. And Theresa May, Prime Minister, made a comment here about Article 50. You can go on and on to read what she said, but that's what triggered this move here. That's what triggered the move here in the pound dollar. And that's what gave us our continuation breakout trade. That's why very often inside a consolidation, I will go to and switch to my thinking. I'll switch to looking for continuation breakout trades, especially if there is a significant and a very obvious high and a low that's creating all this consolidation. Now, the high and the low is going to change at different times. It's not always going to be as big as this one. This high up here was at 1.3120 approximately, and the low was down here at 1.2914. That's a pretty big range of consolidation. The consolidation range, the high and the low, needs to be more than 50 pips, preferably 70 pips or larger. As big as this is, that was perfect. That was fine. As long as it's solidified and it continues to hold, and by looking at this entire week's worth of trading, it still worked. Now, again, if you're going to use a technique like this, then you'd be waiting for the continuation breakout trade. To wait for the continuation breakout trade to set up on this pair, this was the only time it developed so far, was today. Because all last week, it didn't give us a continuation breakout trade. There wasn't one. Because again, going back to the most significant high and low, this is an obvious, clean high and low and a price swing, a high and a low right there. It's really obvious. Sometimes it's not obvious. I teach you how to do that. I have specific rules. This was actually the very first technique that I created in my trading system back in 2001. And I worked for a long time. And I'm talking about months after months after month after month, every single day on just this one technique. I needed to figure out what was consolidation. How do you qualify or quantify consolidation? What are the boundaries? What are the limitations? What will cause a head fake? What will help me prevent getting into head fakes? All of that, all of those details I had to work out before I was able to start using this technique effectively. It was one of the hardest things I ever did. And it was the very first technique that I developed with my trading system. But it is the most profitable and the most reliable trading system and technique. Now, again, going back to the fact that this is a really big consolidation range, it's not always like that. The consolidation ranges very often usually will develop, and then maybe a few days later I get a continuation breakout trade. But this one is moving in this particular fashion, in this manner, for obvious reasons. There's a lot of sensitivity to the data that's coming out of the UK. People are still trying to determine what is Brexit, how is it going to affect everybody? How is it going to affect the UK and the rest of the markets, the rest of the world? How is all of this going to play out? When is it going to start moving lower? Or is it going to turn around and go back up? There's all of this this anticipation and these unknown factors, and that is the reason that we see a lot of the behavior and a lot of the consolidation here. People are playing this particular currency pair, but holding on to short-term trading opportunities. That is the reason we see a lot of consolidation, but we're starting to get a little more happening here starting today, which is on this breakout. Now, on that signal candle, let's talk about the technical trade itself. On the signal candle, you'll notice that the first indicator that I look at is the Bollinger Bands. The Bollinger Bands on this indicator, and I use the standard settings for the Bollinger Bands. Go to, reading John Bollinger and how he developed it if you want to. I actually took his 3-day seminar many, many years ago in Los Angeles County, California, and it was an awesome seminar. I really like John Bollinger, and it's not so much that I learned just about the Bollinger Bands, how to use them, but just his philosophy and his approach to trading. You'll learn a lot from him if you ever get the opportunity. So I highly recommend following up on some of his tutorials and education online, and also some of his books and DVD courses. Now, the first indicator that I look at is the Bollinger Bands, and they need to be separating away from each other on that signal candle. When that candle closes, now I always talk about waiting for confirmation. And you absolutely have to wait for this candle to close. You can't predict. Very often when I started looking for these breakouts, and I was doing it myself when I was putting together this system, this technique, I would get into the trades when support or resistance was broken. And they would turn into head fakes. They would pull back up before the candle would close. And I learned to do that because other people were doing it in some of the chat rooms that I was learning how to trade from back in 2001. But they were always failing. So what I found by doing this on my own, and you'll learn how in my membership course, the trading course, how I actually stumbled across all of these, examples or these specifics on how to trade this. what I was doing is I was moving one candle at a time, and the market was already closed. So I was only looking at closed completed candles. And what I found is, obviously, if price is going to come through support and then pull back up and create, like, for example, a hammer, then the candle would close above support, and then I would never end up going short or trying to expect that it's going to be a continuation breakout trade. So that's one of the ideas. And I immediately, when I started to see that, I thought to myself, okay, just start looking at closed candles. So no matter what time frame you're looking at, if it's a 1 minute, 5 minute, 15, 30 minute, look at closed candles, and you're probably going to do a lot better because it's going to keep you away from anticipating rather than waiting for the confirmation. You need to wait for confirmation instead of anticipating what's going to happen. Wait for confirmation. You're going to get plenty of opportunity. Believe me, you're going to get an opportunity. It's just you have to wait for the opportunity. That's the challenge. So once I put this technique in place and I had all the details worked out, the next biggest challenge for me was to follow the plan, to follow the rules. Because I could see price moving all the time, but if it wasn't a continuation breakout trade, I had to do nothing. I had to just sit and wait. And that was the biggest challenge. And I know it's one of the biggest challenges for a lot of people is they can't sit and wait, but you have to sit and wait. If you can sit and wait, you'll find these trades. And this technique is accurate 90 to 95% of the time. If you do it just like I show you, you're always going to win. And occasionally you'll have a losing trade, but you'll be able to earn it back right away on the very next continuation breakout trade. And you can use this technique on all of the currency pairs. You just need to know how to set it up and how to execute it. Now, again, I mentioned 55 pip target. So when we get into this trade, we trade it to a 55 pip target. So our entry today was 1.2899. Now, 1.2899 with a 55 pip target. I'm going to move this out a little bit and you can see exactly what happened here. So on the next candle, it went to our target 1.2844. There was very little retracement. Now, I want to point out that it's not always going to look like this. Sometimes after the signal candle, I don't get the entry. I have to wait a little bit because it'll pull back up and retest the level that it broke out of, which is the support level over here from a couple of weeks ago, that 1.2914. Every time is a little bit different. The way it reacts, the way it behaves, the way it moves is going to be different. So this trade was executed with the Platinum Signal Service, and everybody received 55 pips. And this paid and hit its target within the following hour after the signal was created. And that isn't always going to happen. Sometimes it'll take 2 to 3 hours after the signal, after the entry, and it'll take approximately that long to hit the target. And then again, like today, sometimes it's going to happen a lot faster. And it really is based on the way the market reacts to it and the type of news that it is. So you need to take that into consideration. So then go back to, of course, reading that article about Prime Minister May making the comment about Article 50, and it looks pretty obvious that people are going to start putting on more short positions as long as the commentary and the expectations and the sentiment is more bearish for the pound here versus the dollar. So again, this is the 55 pip take profit level. Now, you'll notice that it stopped right there at the 55 pip target. That happens every once in a while with me when I execute this trade. Not just with me, but with all of my students that use this technique. Every once in a while, price will stop right at that 55 pip take profit level. And then people will, new students and people will say, hey, wow, I can't believe that you were able to pick the bottom precisely. That doesn't happen all the time. and I am no genius. It's just that I've worked really hard to calculate where this and what take profit level I should use. The 55 pip take profit level is not a number that I just picked arbitrarily. It's not, I wasn't guessing. I did a lot of research as far as the daily average trading ranges. So back in 2001, there were not a lot of websites that had this information available, but I was able to find back in 2001 a couple of websites that had some spreadsheets that included the daily average trading ranges for the majors. So I scoured through all of these spreadsheets and looked and looked and looked, and then I needed to test it, and I needed to wait for the continuation breakout trade, wait for my entry, and then calculate how far it usually goes before it stops and then reverses and goes the opposite direction. And I had to test it out with a couple of, at first it was 70 pips, then 80 pips, and I would get into some of these trades and I would be up 35 pips, and I'd think, wow, what if I could get 65 or 70? And at first I was picking numbers out of thin air when I first developed the entry. So it was a step at a time. I had to figure out what was the right ranges of consolidation and when a breakout would actually occur. Just to give you a little side note, I actually started using this strategy, this technique. I started to build it out on a 30-minute chart, and I realized that on a 30-minute chart, I continued to see more head fakes. So when I switched over to a 1-hour chart, I cut out almost all of my head fakes. The 1-hour chart is the most reliable to give you the continuation breakout trade without or to avoid head fakes. Because what I noticed is, for example, if a candle closed below support on the 10 o'clock candle that closed at 10:30, from 10:30 to 11, the candle would turn around and go back up. Well, on a 1-hour chart, that would look like a hammer, but on a 30-minute chart, it would look like it was breaking out. That's what I'm talking about. So I don't use this technique on anything smaller than a 1-hour time frame. A 30-minute chart, if you try to trade the continuation breakout trade, will give you head fakes. It'll create head fakes, and you'll end up getting into the trade, and it won't work. You have to use it at least on a 1-hour time frame. If you change any of these conditions, any of these parameters, then you're going to get different results. You can use this technique, and I do use this technique on a 4-hour chart, and you can use it on a daily chart. I have students that actually use it on a daily chart. They swing trade with this technique, and it's an awesome technique, an awesome strategy. Now, the targets are obviously different on a 4-hour and a daily time frame, but I teach you how to do that in the trading course. Now, when we talk about taking profits, the 55 pip take profit level, I tell all of my students, take profits, lock in profits. When I worked out this strategy, it was to earn 55 pips on the majors, on the euro dollar, the pound dollar, dollar yen, dollar Swiss. You have to lock in profits. If you don't, I can't say what's going to happen afterwards if you try to hold on too long. Sometimes the trend will continue, and it'll go a lot further. What I recommend is that you take profits here at the first take profit level, which was the 1.2844. If you wanted to hold on to it longer and you were doing this yourself, if you were executing this trade yourself, lock in profits here if you can scale out of the trade, and then set the open half or the open remaining position at a break-even stop loss. And if price comes back up, obviously just a few pips below our entry, you would close it at zero, but you'd still lock in the 55 pips that you earned on the first half of your position. Now, if you're trading one lot, of course, you can only close the entire trade there at the 55 pip take profit level. I don't recommend holding on any more than that, because sometimes it'll do exactly what we see here. It'll stop right there at that 55 pip take profit level. But it will always hit that 55 pip take profit level if you do it correctly. I mentioned a 90 to 95% success ratio. So yes, occasionally something odd out of the blue is going to happen. But I don't remember the last time that happened. I mean, it was back before spring when we saw a trade. And even if a trade is going to fail like this, I use a 55 pip take profit level, profit target, but I also use a 55 pip stop loss. It's a 1-for-1 reward to risk trade. You have to give it room to move around. Sometimes after the entry and that breakout, price will go back up and test the support level. And the structure of the trade, based on the entry to where support or resistance is, depending on the direction that it breaks out of, that is going to fluctuate. The distance is going to be a little bit different, so you have to give it some room. But it will always work just like this if you do it correctly. Now, if it's one of those 5% of the time that the trades don't work, you can usually identify it right away, and I do not need to use the 55 pip stop loss. I can cut the trade off minus 17, minus 27, something like that, and I don't need to take the 55 pip hit on the stop loss because I can see that something was wrong. Very often, that's exactly what you see on that 5% of the time out of the entire year that it won't work. So 90 to 95% of the time, this is going to work just like this, and you can execute this trade all the time across all of the major currency pairs, including some of the exotics. And that's exactly what we're doing every day, just like this. So what happens with the Platinum Trade Copier service, signal service, is that I execute this trade on my MT4 platform, and then the Trade Copier immediately opens the trade for you and executes the trade for you just like this at the same level. And then I watch where price is going. I set in my take profit level and or close it manually as it's approaching if it moves quickly like this. But I'm there. I'm active. I don't go to sleep when I have a trade open. Occasionally, there will be a trade that's open for maybe 12 to 13, 14 hours, but I'm going to sit there and watch it, monitor the trade, and I close that trade or it hits the take profit level, and it does the exact same thing for you in your MetaTrader platform. So even if you were sleeping when this happened, I was trading this, and you would have got this trade 55 pips this morning. So now we're off to look for more continuation breakout trades on the rest of the currency pairs. It's been a little bit consolidated this morning on the euro dollar, dollar Swiss, dollar yen, but we're looking for breakouts. I also talked about the yen in the update video that you have the link here on this page to see that if you want to watch that video. But watch that video that I sent out a couple of days ago, and you'll see exactly what I was talking about here on the pound dollar and how I was waiting for the continuation breakout trade, because I felt that that was going to be the most reliable signal and the most reliable technique to use because of the consolidation that's been in place for so long. Now, thank you very much for watching this video. I'm sorry it went on for so long, but I just want to explain all of the details about how it works. Now, again, I don't see a continuation breakout trade every single day. And the next time consolidation sets up here on this particular pair, it's probably not going to be as big as this range over here from a couple of weeks ago, that high and that low. It will be a different type of consolidation range. But it has to be more than 55 pips, preferably 70 pips or larger. And again, I usually don't have to wait a whole week for a continuation breakout trade on a particular currency pair. It's not something that happens. This is just unique and specific to this particular trading environment that's affecting the UK and affecting the pound because of this particular Brexit scenario and this situation. But it changes, it cycles. You know, once we get past that, the market absorbs that information and gets accustomed to the information that's coming out there. The trading ranges will go back to a more normal trading range. And very often, and sometimes, I will get 2 continuation breakout trades on the same currency pair in 1 week. Sometimes it happens, and that would be obviously a trending move. So we'll talk about what's going to happen and how consolidation develops later on in the rest of the week. Now, I don't know if I'm going to get another continuation breakout trade on this pair. I could get one later on, maybe Wednesday, Thursday, Friday, something like that. Or it could just go sideways or come back up and retest that level and just go inside of consolidation. Anything can happen. But I just wanted to show you how this works. This is exactly what we were talking about on Friday. So right out the gate, as soon as the market opens, a few hours later, we waited, got the signal, took the 55 pip target. Platinum Signal Service executes the trade for you into your MetaTrader platform, and then we just move right on to the next trade. We look for reversals if that's the case, like the euro dollar T2 pattern on Friday, or continuation breakout trades. Thanks for watching this video, and I'll be sending out some more update videos later on in the week.